What's going on, guys? It's Pac here with a market review of May 1st, 2024. Crazy day, crazy red folder news day, FOMC day. So you know it's going to be super, super exciting, super, super fun. So let's hop right into it. So right here, we are at open. That's what this green line is, New York open. You can see that the 1 minute right now is clearly bullish structure as we've just been trading up. Now, as we're going into open, one thing that I noticed was these two highs that you have here on higher time frame, like a 5 minute or 12 minute, these are just wicks all up here. So what I'm expecting is the first zone to get smoked and to trade into here at open and give us a reaction, because we'll take out this liquidity, which is this blue line here, which I'm going to change it so it's a little bit easier to see. So that was just kind of something that I had seen on open, and I kind of just expected us to drop into this gray zone down below, just because of these being higher time frame wicks. So as open comes, you can see just a nice little reaction. We drop right into that box, and you can see that we get a nice reaction. So here, this is a very vital point. What happens when we close this low? Well, structure actually flips bearish, right? So there's a structural flip right here. Immediately on open, there's a structural flip. Okay, so at this point, 4 minutes into open, you should only be looking for bearish trades to stay with trend. Not saying you can't take bullish trades, but if you stick on the side of the 1 minute structure, you're going to be a lot more efficient and a lot more well off in those trades, because you have structure and trend on your side. So as we keep playing this out, we're waiting for a valid low to occur. And for a valid low to occur, we have to close under the bearish candle that puts in the low, right? So that we can start looking for shorts as it trades back in to this zone. We need that valid low to occur first, and then after that, you can really find some bearish trades. So we trade back in, we just wick that out. I think right there, still haven't closed over that red line. Boom, you get a closure right there. We get a closure right there, denoting a valid low, and it's around 50% of our zone. This would be a prime opportunity to start finding shorts, a prime opportunity to maybe drop down time frames, maybe to look at just this zone at the 50% and take a 1-to-1. Just this is your prime opportunity to start taking shorts. And you might ask, Pac, well, why is that? Well, we put in the valid low. We're taking something out around 50%. This typically will provide a 1-to-1. As we click through here, that's exactly what you get. You get a little choppiness here. As you can see, we haven't put in a valid high yet. So once we put in a valid low, we're looking for it to tap maybe 50% to give us that 1-to-1, which happened at this red line. But then price will not start trading down until it puts in a valid high. It just will not occur until it puts in a valid high. So right now we need to close underneath this candle. If we get a close underneath this candle, then you can consider these wicks to be smoked. Why? Because it's all mitigated in here, and then in a trend, what's the expectation? Always continuation. In a trend, the expectation is always continuation. So there's your valid high. So you can pretty much bank on that these lows down here, we're going to be just smoked. And if you did get involved in anywhere in here, I mean, you have 24 points to the downside to 19 points to the upside. So that's a pretty good RR. And you can see, I think, relatively quickly, if I remember correctly, that we smoked these lows. There you go. Lows got smoked. So what does that do? That gives us new structure. New structure. So what would we do? We would move this box over and up, and we would just keep following. We would just keep following structure. You have that. This right here is not a valid low. Okay. This is something that is not a valid low. This is not a valid low, this closure, because this candle did not close underneath that wick. So we would need a closure above this candle up here. Okay? Once we get a closure underneath this candle's wick, which occurs on this giant candle, we would move our valid low to have to close above here. Typically, this is a news candle. When you get this, and you see these candles that take out highs and take out lows, this is what you would call an idiot box or a range. That's exactly what this would be, an idiot box or a range. So these are the two lines we're looking at. And what can we do? We can mark out the wicks down here as the bottom of our range, and we can mark out the wick up here as the potential top of our range. Let's see what happens. Well, you trade back up to the top, trade back down to the bottom, try to trade back up to the top, and eventually we close out, because what's the expectation? We're bearish, so we're going to expect continuation. Now you have to remember, nothing inside of here is structure. This isn't structure because we never got a valid low. This might be a valid low internally, but it didn't close underneath here first, so that's not structure. So nothing in here is structure. Nothing. Maybe on a lower time frame, but not this time frame. So now, what candle are we looking at for structure to get put in? Well, we're looking at this candle here because it's the one that closed underneath that candle. So now to put a valid low in so that we can continue structure, it needs to close that candle. And let's see if that's what we get. That's what we get. So now we have a new low in the market. We finally have a new low in the market. So we should expect price to trade up. And once it puts an invalid high, we should expect price to trade down. Has it put in a valid high yet? No, it hasn't. Still hasn't put in a valid high. Still hasn't put in a valid high. Still hasn't put in a valid high. We'll just go to when it does. Just ranging here. We're finally back in our previous zone. So if we mark out, this is a different fib I was messing with. Where's the first reaction? Typically around the SNDR, which is typically around your 30%. There's your first reaction. There's your valid high in the market. So what's the expectation? Expectation is always continuation. So we'd expect these lows to get relatively smoked. Now let's see what occurs. So it looks like we're failing to go lower. It looks like we might be failing to go lower. It does look like we sweeped out a zone and tapped into an unmitigated zone down here. So when that occurs, because you can see that we're still stuck in the range of this candle, and we're used the 30%, are we expecting the 50% to give us the reaction to go back down? The answer is no, we're expecting the 70% up here. And then also keep in mind that none of this is structure. None of this in here is structure. So wouldn't it make sense that we sweep all that out, tap into the origin, which is up here, which happens to be around the 70%, the 50% of the origin, so happens to be around the 70%, because it looks like we're failing to go lower here. We have a confirmation of failure to go lower when we close and make a valid low, which means price is going up. So we're not just taking a 50% tap here, because it already took the 30, we're expecting it to trade up to the 70. It trades up to your 70. There's still all these equal highs. I would expect all of these to get taken out first. right there. So I'm not looking for shorts until that happens. So we'll see what occurs. Still hasn't taken them. It's taken them. So now we're just waiting for something to present itself, usually in the form of a valid high, typically in the form of a valid high. And for a valid high to occur currently, we need to put in a valid low. We need to close underneath this candle right here. Which you don't get yet, so you're just waiting for it to close there. Okay, we closed higher, so we need a valid high to occur here. We're still expecting a reaction here. There's your valid high. You would expect this to do what? What's always the expectation in a trend? Continuation. Continuation. So let's see what occurs. And price dumps rather quickly and continues all the way down there, which is beautiful, right? Beautiful. That would have been a beautiful trade. Origins always provide the biggest move. Why? Because you're all the way at the top. You're still in structure. And you get the best RR, right? Compared to a 50% or a 30% tap. But as you can see, it used the 30, it put in a valid high, and then it's run straight through the 50 up towards the 70. Ranges a bit. Finally takes the liquidity that you're looking for, all these relative equal highs here. And then puts in that valid high, and then it just takes off. Just takes off. So we have new structure here. So what would be the expectation now that we put in new structure? Right? The expectation is that we'll trade back into this somewhere in this range. Typically around 50% is the original thought process. But of course, we always have our SNDRs, and then we always have our origins. So I'll put my SNDR here. And I will put what I would consider the origin, which would be this whole entire move here. And we're expecting, once a valid low occurs, for us to trade back up, okay? Okay, so there's an SNDR. I mean, there's a close to put in a valid low right here. So where's the first target, do you think? Well, I would assume it's this gray box, which would be the SNDR. And boom, smacked it. We're trying to give a reaction. We will not head down until we put in what? A valid high. So until that occurs, I can't start looking for shorts. Until that occurs, even though we're in our zone, I cannot start looking for shorts. As long as we're in a zone, we take something, and we form a valid high, then I can start looking for shorts. So right now it's this candle I've marked out, and I'll move this up as we trail. Then it's this one. Still doesn't close. Still this candle. Now it's this candle now. I'll move it over. It's this one. And so this SNDR is not providing the downward move that we were looking for. So what are we going to expect? We're going to expect it to move out of the SNDR and then give us our reaction. And then give us our reaction. Typically, when this occurs, since we didn't get that reaction around the 30, what are we going to get it around? Usually the 50%. And since we have this liquidity point, and we have the 50% here, and we have the bottom of the origin, I would expect it to just drill right up into this area, and then give us our reaction down. Because right now we still haven't put in that valid high. We still have not put in a valid high. Keep that in mind, because you cannot start going shorts. You can't just randomly click the red button until you get that valid high to occur. I'm right up in there. Let me clear some of this off. I don't want to confuse you guys. I think everyone can go back and remember what I just said. So we drill right up into it, and all we're waiting for is what? That valid high to occur. Because we're in a bearish trend. We're expecting it to continue. And there you go. Valid high occurs, so where's the target? The target is these lows. These lows, which technically it's this one. These lows. as you can see, we've run those lows pretty dang quick. Really, really, really quick. So then we become, where's our protected high move to? Right here. What's the expectation now? That we trade back into this zone. Once we put in a valid low, we'll trade back into this zone. And then where's our SNDR? Well, our SNDR is here. And then we have, let me change that to blue so it's easier to see. And then what do we have? We have our origin up here, which in this case, I would probably use this. So once we get that valid low, which would be a closure above this candle here, then we can expect it. There you go. It automatically trades there. If we get some sort of reaction that we like, we'll take a short out of that. Boom, nice little reaction short. It gives you your valid low and then or valid high and then instantly gives you your valid low. It's going to trade through this SNDR. Boom. And just like the previous zone, what would we expect? It to go tap into the origin or get pretty dang close. There you go. It's tapped into the origin. Very nice to see. Once you get that valid high, boom, I can start looking for shorts. I can start looking for shorts. Now keep in mind, this high right here was never taken. A lot of the times inside these zones, when we get really, really close, we'll pull down and go take it, especially when it kind of V-shapes like this and doesn't actually take anything. So just keep that in mind. So if you do go short here, you just start with your stops here until you get a closure back underneath here. Just to be safe. But again, what are we expecting? We're expecting this low. That's our first expectation, is that this low gets taken. Okay, so that red line got taken. And what I'm seeing here is we're seeing a lot of tightening up. I did just notice this liquidity point here. This is a pretty prominent liquidity point. So if inside this area we get a valid low to occur, I would expect it to do something like at least like this and then possibly go that way. And if it doesn't, if it goes like this and fails again, then it's just going to run these highs because they become weak. So let's see what occurs. Hasn't taken that low yet. Let me clean this up just for you guys. Let me clean that up. Let me grab this low. So we're looking for that low at least to get caught out. Let's see if it does. Yep, takes it right there. If it forms a valid low in this area, you would expect it to bounce a little bit. Yep, there's your valid low right there. So we'd expect it to bounce probably at least over all of these, this little range that formed right here. If not, at least over this high there. Bang, nice. So when you see something like this, what does that tell you? It tells you that we're going to try to make another attempt down. Why? Because all of this is technically a range. We're in the top of the range, and this ends up being the bottom of the range. We're going to make at least one more attempt down, and if we fail to close this low, then these highs are definitely smoked. Definitely smoked. So once we put in a valid high, which occurs right there, this, before it puts in a valid low, has to run these lows. Otherwise, the highs are getting smoked. Okay, put in a valid low here, so we know that the next target is up here. We know that it's higher. We know that this is now a weak high. Why? Because it failed to do its job. It failed to continue structure. It failed to do its job. Weak highs are things that fail to do its job. So we know that these highs up here are going to get smoked in this area. And then we'd expect a bounce back down when it does take those. Why? Because again, what is this? Top of the range, bottom of the range. So let's see. Goes and takes it. We are approaching FOMC, the funds release or funds rate here. and then the press conference there. So we take it, we give that push back down, tries to go back to the bottom of the range, and then just pushes, looks like straight back up into the news. So right here before FOMC comes out, what would you be expecting? Well, I would be expecting, since we closed this high, which is the failure high, to put in the low, that if you watch my range video, what does it say when this happens? We expect it to run out the top of the range. We expect it to run out the top of the range after it closes the failure internal. So we'd expect it to run out that way. That'd be the expectation. And surprise, surprise, what does it do? So what do we get here? We get a flip in structure. We get a flip in structure right there. A bullish flip in structure. So what happens? So now we're in FOMC, so we should be expecting some sort of push out of here. We should be expecting some sort of push because we got closure. We didn't just get closure over this high. We also got closure over this high. So it's taken out two protected highs. We should expect this thing to take off. And so we know that the first 30 minutes is typically manipulation and chop, but that is not going to negate the fact that structure is still king. It will never negate the fact that structure is still king. All right, we haven't put in a valid high yet. And we put in a valid high. Nope, still not. Okay, we put in a valid high here, so we have that structure now there. Remember, our previous zone is now here. So our previous zone there. So what does that make this up move? This makes this up move the SNDR right here. So in strong moves, especially FOMC, what do you expect? You expect SNDR to hold. Expect SNDR to hold. And once it puts in a valid low here, once it closes this candle right here, you would expect the highs to get taken. Why? In trend, the first expectation is always continuation. The first expectation is always continuation. Once it closes that high, boom. So you'd expect these highs up here to get just absolutely obliterated. Let's see what happens. And those highs get absolutely obliterated. So now where's our protected low? Our protected low becomes right there. So where's our new zone? Our new zone technically starts from there and goes all the way down to this low right here. So this is our new zone. We now have the press conference come out, taps right into 50 here. Let's see if it runs this zone out. It does not. This would be this candlestick pattern right there. That would be gains to this thing just taken off. Okay, a little rangy in here. Still looking to take out the top side. Boom. So what do you have? You have new structure there. And technically there. So where's our new zone? Our new zone is from that high down to this low. That's technically our new zone. And I think we just ripped from here. Now, you'll see this purple line on my screen. This was a daily target that I had. Something I went over with a couple of the people that I trade with on why I had that daily target. And it's simply a daily valid high that occurred from yesterday's close. So we're expecting a retracement back up to that at some point. Doesn't really mean it was going to happen today, but FOMC gave us that, extra little push. So if you notice in here, there's no structure that occurred. So what does that tell us? When we start trading down, are we just going to bounce here? Most likely not. We're going to trade at least all the way back down into this box when we start trading back down. At least all the way down into that box. Okay. Boom. There you go. All the way back down into the box. Gets a bounce right off of it. Technically still bullish structure. When you know that you're dropping down is when you have something called a range flip, which is when we put in a valid high, we put in a valid low, and it fails, and then it closes that low. So this becomes a new type of zone here, and you can see it takes the 50% and just runs with it. And takes out everything. Why? Because it's non-structured. It's all liquidity. And then the red line is close, and it looks like right into close we flip structure bearish, so that means we have a protected high up here now, and we just continue. Boom, bada boom, bada bang. That simple. Nothing too complicated, just following that structure, that 1 minute structure, and your expectations of continuation in a trend, your expectation of each zone, tracking if you actually have valid highs and lows. That simple. All right, I'll catch you guys tomorrow.